Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories at 1:30 p.m. this Friday. Markets at the day's low, with the declines sharply outnumbering the advances. IT financials lead the decline.
Sobha reports a strong trend in home bookings and collections in the third quarter. The commentary also exudes optimism.
Specialty steel maker Mukund surges on selling land in Thane in an 800 crore rupee deal. Management tells CNBC-TV18 the fundraise will result in interest savings of 80 crore rupees annually, and they're on track to generate 6,000 crores of revenues.
SEBI allows the government's stake in IDBI Bank to be classified as public holding provided its post-divestment stake is not greater than 15% and it doesn't exercise any control. The move removes a key hurdle for bidders. All right, those are the top headlines that we are tracking today. But look at the markets, the way they've fallen, and the sell-off has just become even worse from the highs. Nifty is at the day's low. It's a 176-point cut out there, and it's the bank Nifty which is putting so much pressure. So that index is down 630 points as we speak. Across the board, there is selling pressure. The mid-cap index as well, down around 1%, and advanced decline ratio comfortably in the favor of declines today. As I said, across the board, we are seeing selling pressure coming in, and all the indices are in the red right now. That's the sectoral indices that I'm talking about. And it is really Nifty IT, which is actually topping the charts. Reema, IT numbers expected next week. And we saw some selling pressure yesterday. It has continued today as well.
Absolutely. And there are so many brokerage voices who are saying that, the weakness in IT is not done. The earnings weakness is going to extend from Q3 over the next couple of quarters, and that will result in a further derating. So that's what the fear in the market is, that if Q3 numbers are weak, you will say, well, it's on account of the December furloughs, etc. But if Q4 numbers also turn out to be weak, if the guidance for next year, which will be out in that April-May period, is also weak, then there will be EPS downgrades. If there are EPS downgrades, then you will say, well, even these valuations are still too high because they're still at a 20-30% premium to their pre-COVID average multiple. So that's the fear in the market, that the worst perhaps is not done just yet. But look at the way the markets have corrected, right? The sell-off has accelerated. We're at that 17,800 mark. The Nifty has now breached yesterday's low of 17,892. That was seen as an important support level. Thereafter, a level to track will be the 26th December's low, the intraday low, which was 17,774. This level is going to be very crucial. For now, at least, we're managing to hold above that. Tonight, you will have the crucial jobs data coming out of the United States. The mid-caps, too, today are falling in step with the frontliners. 0.9% gone on the Nifty, 0.9% gone in the mid-caps. And remember, the mid-caps over the last couple of days were outperforming. Even on a week-to-date basis, if you still see, the Nifty is down 0.5%, while the mid-cap index is down 1.5%. But today, the mid-caps are not outperforming. They are selling off in line with the frontliners. And names like Bajaj Finance, they're the ones which have cracked hard. A 6-7% fall yesterday, and it's followed it up with another big decline today, and nearly 10% gone in a span of 2 trading sessions on this heavyweight. Well, we'll talk more about what's happening on the mid-cap end as well, but let's get in Hemen Kapadi of KR Choksi Securities to understand what's happening and what's the way forward. Hemen, what have you made of the day so far, the sell-off and the trade?
A very good afternoon to you, Reema. Thank you for having me. Frankly speaking, the correction, the simplest way to put it is the correction is not yet over. We peaked at 18.9. Lower tops, lower bottoms continue. And actually, Reema, the bank Nifty was something which was propping up the market, and it was a sort of protection. Now that's gone for a toss. So whatever was protecting the market has slipped. Reliance was another stock. I'd say sector. Reliance is huge. So it's not a stock, it's a sector. Now Reliance has been docile. I mean, a close about 25.80 would have triggered off an upside in Reliance, and that would have sort of protected the market. That's not yet happened. But relative strength, yes, Reliance is not close to the low. So frankly speaking, and we've had the dollar index come off almost 11%, Reema, and our rupee this last couple of days has strengthened, but it's not appreciated by 5 or 7% like it should have. So n number of factors why the correction is deepening, not stopping. And like you mentioned, 17,774. If that breaks, which is a possibility, we could lose. We could come to 17,613 or 17,430 next week. Reema.
Okay, and Hemen, what would your individual technical picks be in this case?
Firstly, a buy call on well, it's like a contradiction, but yeah. Firstly, a buy call on ICICI Pru at 470, stop loss 458, target 494. We are in a short-term uptrend, higher tops, higher bottoms, indicator support, moving averages seem to support the move. But secondly, a sell call on State Bank of India. We seem to have made a peak at 620. Now we'll slip below the 55-day moving average either today or tomorrow. The oscillators have reflected a crossover sell after negative divergence. So this seems like declining further. So sell on State Bank at 600, stop loss 612, target 578.
Okay. All right, Himen, thank you so much for joining us. With that, let's move on to our segment Mid-Cap Movers. We have Vivek to take us through the mid-caps that are moving around in trade. Vivek.
Well, good afternoon. It's a very weak session even in the broader end of the markets, but a few stocks that we were highlighting now. First on our list, some of the stocks, especially stocks that have ownership as far as the Gujarat-based state government is concerned. And, there are newspaper reports that are indicating that there will be a stake monetization or a divestment of these stakes. Back of that, some of those stocks were in focus. The other stock on our radar is Landmark. This is a recent listing, one of the few listings, that we saw in the last 2 weeks of December that are actually trading above the IPO price. Also today in trade, Aptech as well as Gati moving up on very strong volumes. Keep an eye out for DB Corp, Nava, erstwhile Navbharat Ventures, as well as National Peroxide. National Peroxide today up on high volumes. There was a small block deal at, just prior to market open. So this particular stock, after that block deal, has surged in the trading session. On the other hand, some of the stocks that are witnessing a bit of pressure, GHCL, there are newspaper reports that are indicating that there could be some worries in terms of an environmental clearance for a proposed expansion. Stock is seeing a bit of cool off from day's high. Dharmaraj Cropguard today, moving down on strong volumes. And in the housing finance space, both GIC as well as LIC Housing Finance today moving down on large volumes.
Okay, thank you very much for that. Get into a break. Up next, we'll connect with Umesh Chaudhary, MD CEO, Titagarh Wagons, to discuss their demand and order book.
Welcome back. Still tuned into Mid-Cap Radar on CNBC-TV18. Well, Titagarh Wagons, that's the stock on our radars, has rallied nearly 150% in the last 1 year on expectations of large orders, improving fundamentals, and overall traction in rail and rail-related stocks. Umesh Chaudhary, the MD and CEO of the company, is joining us now to discuss the demand trends and the order book outlook as well. Mr. Chaudhary, good afternoon. Thank you so much for joining us. Well, the stock has done really well, and it is in anticipation of a better demand and order book as well. So can you give us a sense of what Q3 has been like, the expected orders? Was it better than what you anticipated? And what is the quarterly run rate that you're looking at?
Yeah, good afternoon. Always a pleasure being with you. So yes, absolutely. I think there is a much stronger, much more positive outlook in our sector, in our businesses. And as far as Q3 is concerned, we'll be coming out with our quarterly results in due course. So I cannot really speak much about the Q3 results and the Q3 order booking, which also will be announced along with the results. But if you look at the run rate that we already achieved in Q2, we did a revenue of 620 crores in Q2 with an EBITDA of maintaining our EBITDA guidance of 8 to 10%. And if you really compare it to where we were 3 years or 3.5 years ago on an annualized revenue of 300 crores, so obviously there is a large journey that has been traveled in the last few years.
Umesh, there are a lot of reports which suggest that railways may get a big push in the upcoming budget. Have you heard anything, any conversations from the government to the tune of that the budget allocation to railways is likely to go up?
Yeah, I mean, we've been seeing this quite a bit because, the kind of orders that the railways have been placing and the kind of infrastructure investment that they've been making. I always maintain that the rolling stock is the last end of the spectrum as far as investment is concerned. So the railways have invested in the infrastructure, in the track, in the signaling. So in order to justify that investment into track, into signaling, the rolling stock investment has to take place. So we've seen the large wagon orders being placed last year, which is a 3-year contract. The tenders that have come out, the Vande Bharat tender that has been floated, we participated in the Vande Bharat tender as well. So, a lot of the traction in terms of ordering is coming up. We were at 10,000 crore plus order book in the last quarter results, which we declared. And obviously, the new tenders that are going to be, that have been in the pipeline, that are going to be announced as a consequence of the forthcoming budget are things that are making us very optimistic about the sector.
Okay, so that is about the railway sector. The other opportunity that you spoke about the last time as well is metro tenders. Can you give us a sense of what kind of orders did you get in Q3? If not the exact number, you had said targeting around 200 to 250 metro car production a year. Did a part of it come in Q3? And what is the outlook? Will you be able to do better than this 200 to 250 guidance that you had given us earlier?
200 to 250 cars of metro cars or coaches, the capacity is fungible between coaches like the Vande Bharat type of coacher or metro cars. So that's the capacity we are targeting to reach in the next couple of years. This is a new line of business that we have gotten into. We are now executing the Pune Metro. We are continuously delivering trains to the Pune Metro. We've signed the contract with Bangalore Metro via CRRC. So that's another 200 coaches. We have participated in some other metro tenders. And as I said about the Vande Bharat, along with BHEL in the consortium with BHEL, we have participated in that. So we believe that the demand that is there for the metro segment, for the modern passenger coach segment is large enough. And we would be able to get to this capacity in the next couple of years of producing 200 cars a year.
When will you get there?
In the next couple of years.
Okay, and could you give us some more color on the tenders for metros that you've participated with, either in consortium with BHEL or otherwise? The size, which cities, and when you're likely to hear from them? Are you already L1 in any orders?
I would refrain from mentioning about tenders that have not yet been finalized for competitive reasons, as you can imagine. But yes, we have participated in some tenders. In some tenders, we are well positioned. Some tenders are yet to be opened. And there are some tenders that are in the pipeline that have been floated, and we are yet to participate in that. In terms of the ones with BHEL, we have only participated in the Vande Bharat 200 train tender. And that also we believe that, the price bid should open up sometimes in the next months.
Okay. Mr. Chaudhary, is shipbuilding and defense order book still 3% of your total number?
Yeah, that's about 350 to 400 crores. So that's about 5%, 4% of our total order book. But that's another segment which we believe can have a big potential. So I mentioned this earlier in my investor call that the three business segments that we have. The first business segment being the freight wagon, the second being the passenger train, and the third one the shipbuilding and defense. The first one is pretty much on track. It's moving full throttle. The second one is on the runway. It's about to take off. The third one, we are keeping it prepared to bring that engine into full throttle as soon as we are a little more advanced in the first two. Okay. But all the three are having great tailwind and great potential to contribute to the overall growth strategy.
Okay, so say by FY24, from 3% or 5%, how much would that contribution go up to? Any targets that you have in mind here?
I would not say that will go up too much in FY24 because defense businesses are not very, they have a large gestation period from the budget sanction to the order finalization. But I would say that if I look at the next 3-year horizon, the target that we have for the shipbuilding and defense business is to be about 20% of our overall order book.
Okay, 20% of the overall order book. All right, Mr. Chaudhary, it was a pleasure speaking with you. Thank you so much for joining us today and telling us what the demand trends are like. And we'll, of course, speak to you again once your Q3 numbers are reported as well. Let's slip into a short break now. Up next, we have a special segment, Mid-Cap Spotlight. We'll be focusing on Force Motors, Pokarna and Sigachi Industries. Stay tuned.
Welcome back. There has been a bit of a recovery in the market after getting to levels below 17,800. We've managed to claw back about 50 odd points. There you have it. Now it's 17,850. So the 26th December low of 17,776 has been defended for now. Let's get to our segment, Mid-Cap Spotlight. Manglam is joining in and he's going to be talking about Pokarna. Mangalam, why is that?
Well, Pokarna is higher in today's trading session, and that's primarily because the US Commerce Department has cleared the company in an anti-dumping review of Quartz surfaces. The US department has said that the company hasn't made any sale at a price which is less than the normal value. So basically no dumping has taken place, and as a result of which the anti-dumping duty for the review period has been 0%. The company earlier in the conference call has said that had the duty been imposed, the cash deposit rates would have seen a significant change, and as a result of which the customers in the US would have had to deposit the same to clear their goods. So this is not incremental positive, this is basically an overhang having been removed for them. But the big triggers that we have for Pokarna going forward, remember 90% of their revenues come in from quartz, 10% from granite. Most of the revenue from quartz actually comes in from the US itself. So over 80-85% of their revenues comes in from the US. So to that extent, this overhang going away is a big positive. The first half of this year has been good for them, 79% jump in their revenues, and as a result of which 115% jump in their profits. The margins, however, saw a bit of a contraction, and that is something that we are expecting will improve going forward. Why is that? Because one, freight rates have declined. Secondly, prices of key raw materials like resins, etc. have moderated over the last quarter as well. And now going forward, their capacity utilization of the new quartz unit will improve as well. So that would further aid operational performance. So these are factors that we're watching out for in Pokarna. Currently, an overhang removed from them.
Okay, the stock is higher. Mangalam, thank you so much for explaining that to us. So that's the reason why this stock is in focus. The other one that we are focusing on is Sigachi Industries. That is also buzzing in trade today. It's up around 10-11%. It is mulling a fundraise. Ekta, tell us more.
Well, yes, Sigachi is in focus. It has a market cap of a little less than 1,000 odd crores. There will be a board meet which will take place on Tuesday next week, which is on the 10th of Jan. They will be considering and approving a proposal for fundraising by way of issue of warrants on a preferential basis to promoters as well as non-promoters. The company, interestingly, is the manufacturer of microcrystalline cellulose, which is basically an excipient which is used for pharmaceuticals to manufacture fixed dosages. 75% of their sales comes in from exports, around 24% from the domestic market. It currently offers around 59 distinct grades of MCC. So it'll be interesting to see what exactly this particular fundraising does throw up and how exactly it will be utilized going forward for the company as well.
Okay, thank you very much for that. Sonia is also with us in the studio, and she's going to be telling us about Force Motors. Sonia?
Well, the numbers that Force Motors reported was quite good actually. On a month-on-month basis, there was a strong growth that we saw in the numbers. The total December sales went up by about 17% on a month-on-month basis, coming in at about 2,291 units. The production went up about 12%. In fact, Force Motors has been reporting very good numbers in the first half of the fiscal as well. The revenues went up almost 40%, and the stock has been exhibiting a lot of strength. So if you pull up a stock chart of the last 6 months, you'll notice that the stock has gone from 1,000 to 1,500 in the last 6 months alone. That's a growth of over 50% in the last 6 months. That's because of the reopening trade that has played out for Force Motors. Remember, Force Motors manufactures school buses, passenger carriers, goods carriers, ambulances, and now since the opening of schools and offices, the school bus demand has gone up substantially, and that has aided Force Motors sales. So this time around, good numbers coming through on a month-on-month basis, and the trend is expected to continue on the upside. Back to you. All right, Sonia, thank you so much for that. The stock is in focus today on the back of those numbers. By the way, for the markets, as Rima pointed out earlier, there is a wee bit of recovery that we saw earlier, and it was led by some of these energy names that did well. So Nifty Energy and Nifty FMCG, after being in the red, have slightly turned into the green. So those two indices and stocks will be in focus as well. For now, we have the likes of ONGC, which is at the day's high. So that stock continues to do well, and that is one of the few gainers as well on the Nifty today. We'll keep tracking markets for you because it is turning out to be a day which is in favor of the bears today. We'll have to see what happens towards the last 1 hour of trade, which will be very crucial. For now, we'll take your leave in this edition of Midcap Radar, your stocks when we return.